Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today we're taking a look at the financial results of First Citizens Bank Limited, or FIRST, for its 6-month period ended March 31st, 2018, as well as the Point Lisas Industrial Development, PLIPDECO for its first quarter ended March 31st, 2018. Let's take a look at FIRST, and for the period ended March 31st, 2018, FIRST reported earnings per share of just about $1.45, which was a 5.8% increase from its $1.37 reported in the prior comparable period, that is the 6-month period ended 31st March 2017. Driving these results was a marked improvement in net interest income, up just around 12.7% from $693.6 million to just around $781 million, which contributed to an overall increase in total net income of just around $109 million, from $1 billion roughly to just around $1.1 billion. Impairment expenses net of recoveries did increase some 27% from $37 million to $47 million, and overall expenses would have increased from $515 to $530 million, or just about 2.9%. So some pretty good efforts in terms of containing expenses there, leading to an overall increase in operating profit of just around 18% to just around $545 million, or a profit after tax figure of around $367.3 million for that 6-month period. Now, as we can see in terms of FIRST total net income sources, it has been a pretty nice upward trajectory over the past 5 years, with 2015 being a notable exception where there was quite exceptional performance. And much of this improvement has been driven by the retail and corporate banking sector. And here we can see, which is net interest income in the main, which has been continuously increasing despite some indifferent performances in the treasury and investment banking area denoted in red, as well as the trustee and asset management segment, which is denoted in orange. Both of these segments have actually, in fact, been declining to some extent, but more than offset by an increase in the retail and corporate banking segments. In terms of expense management, FIRST has been doing a pretty good job, with expenses reasonably stable over the past 3 years in terms of this 6-month period. While there has been some moderate increase in impairment expenses net of recoveries, as we mentioned, year on year from 36.9 to 47.1 million, or just about a 27% increase. So at the current price of just around $34.38, FIRST is trading at a price earnings multiple of around 13.1 times, which is below the sector average of around 14.1 times, offering investors reasonable value. In terms of the dividend yield, it offers investors a dividend yield of just around 4.4%, which is above the sector average of 3.6%. Notwithstanding, its main operating jurisdiction, Trinidad and Tobago, remains somewhat constrained. So on that basis of offering reasonably good value, but with a muted economic outlook for its main operating jurisdiction, Bourse maintains a neutral rating on FIRST. Turning quickly to PLIPDECO, and for the period ended, its first quarter ended March 2018, PLIPDECO delivered its reported earnings per share of $1.94, almost 4 times that of the 53 cents reported in the first quarter of 2017. Now, much of that increase would have been attributable to unrealized fair value gains on investments, which actually increased from $21.2 million to just around $74.8 million, or a 252% increase. In terms of top line or ongoing operations, revenues actually increased just around 2%, as we can see to the right of your screen, from $63.5 million to $64.6 million. And gross profits, because of a very sharp increase in expenses, actually declined by about 0.3%, from $43.4 to $43.3 million. Now, PLIPDECO's revenue by segment continues to be generated in the majority by its port and related activities, as we can see in orange, and this is the 2017 breakdown, where just around 70% of revenues were generated by its port and related activities segment. However, the majority of its profits on paper have been delivered by its unrealized fair value gains on investment properties. And as we can see in the orange, in 2018, for the first quarter, operating profits were just around $77.5 million in purple, and of that, unrealized fair value gains on investment properties accounted for just around $74.8 million. So at its price of $3.81, PLIPDECO on its reported earnings is trading at a multiple of just around 1.6 times, but using its adjusted earnings per share, it's trading at just around 44 times. So on that basis, Bourse maintains a neutral rating on PLIPDECO. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.